Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. So in this video, I'm going to talk about the wonderful world of speculative investments. To me, there's only three types of speculative investments that I actually take seriously. The first is gold, basically commodities as a whole. The second is cryptocurrency. For my case, that's Bitcoin. And the third is actually speculative stocks. And speculative stocks don't necessarily have to be small cap or micro cap or penny stocks. There's actually billion-dollar companies that I still consider to be quite speculative, and I would invest in them, and I do invest in them. So we'll first do like a small dive into each of those, and then we'll do a deeper dive later in this video. And I'll talk about exactly why I think speculative investments are actually valuable for a portfolio. So going into commodities, so there's different types of commodities. There's like natural gas, there's crude oil, there's even agriculture related commodities if you really want to get into that. But like I said, for my case, it's really about precious metals. So gold and silver fall within precious metals. It's hard to get into gold generally. Obviously you can buy physical gold. I tend to not do that, nor do I ever want to get into that. There's gold ETFs such as GLD, which I personally don't like unless you're using it to trade options. And I think for options, GLD is awesome because it has a lot of liquidity. But the way I leverage gold is actually through gold mining stocks. And gold mining stocks and silver mining stocks actually have a lot of overlap. A lot of the times, gold and silver miners are actually part of the same company. So yeah, like I said, there's a lot of overlap. I don't think it's worth to draw a distinction. Let's just call it gold and silver miners. Onto cryptocurrency. So I did mention Bitcoin. So I won't exactly go into the reasons why I pick Bitcoin over the long term, or why I like cryptocurrency in the long run. What I will say is that I'm not willing to care that much about the difference between cryptocurrencies. I do believe in cryptocurrency as a future framework, but more importantly, I believe in the idea of it. I believe in people's ability to romanticize cryptocurrency. Therefore, I think the price will appreciate at some point in the future. And obviously right now we're in a period where Bitcoin is not the latest talk. Actually, the latest talk right now is probably Tesla or EVs. And so there's always, hype cycles every couple of years. I think the last hype cycle was actually Bitcoin. I remember a lot of people started talking about Bitcoin, even people that never even invested. And so the same is happening with Tesla. I'm seeing people on my LinkedIn actually talk about Tesla. So yeah, so right now I think this is actually the moment where I've been accumulating Bitcoin. I had a pretty good average cost, which I'll get into later. But yeah, so it's definitely more of a low-key thing. But like I said, I have future in the price appreciating. And then the last investment is speculative stocks, as I mentioned. So generally, it's mostly tech and biotech. Biotech basically encompasses like pharmaceuticals and that kind of thing, but it's really more about biotech and pharmaceutical research. So to kick off this video, I want to first talk about gold. All right, so on M1 Finance, I basically have the majority of my speculative positions. So these are the different slices that I have. It's gold miners, disruptive growth, rideshare, and cannabis actually. And in this video, we'll be focusing on gold miners and disruptive growth. So these I actually just started funding. Cannabis has been a little older. That's why I had, I'm not doing so well on that one. But honestly, all I have is like $100 in it. And I'm now going to be averaging down on cannabis. As you guys can see, I have an order to go in. But yeah, essentially gold miners is this portfolio's bread and butter, and I want it to be the largest slice within this portfolio. But essentially M1 Finance is kind of perfect for speculative investments because M1 Finance is more of a set and forget type platform, and I don't want to necessarily monitor these investments too much. The other thing is gold and silver miners can be quite volatile, so I'd rather buy the gold miners themselves, or myself, I should say. I'd rather research myself which gold miners I actually want to put into my portfolio and then dump them in there, rather than going through like an ETF like GDX or GDXJ. And so these are the gold miners that I have. I won't get into exactly why I own most of these because it'd just be like a 15-minute video if I did that. But yeah, essentially if I just sort by return, you'll see how massive some of these returns are. This is actually because of a merger, so it's, I don't know if you should look into this one too much. It merged with another company, but that's a different story. So beyond that, Goldfields up over 350%, Harmony Gold up over 300%, and so on. And I'm actually only red on Golden Star Resources and Gold Standard Ventures, but I'm not actually selling them right now. And the crazy thing is, like, the smallest value that I'm up on my green stocks is 27%. So I'm only up 27% on Cisco, which is kind of interesting to say. So yeah, I started funding this portfolio back in August of 2018. Started adding just like very, very little money into it. Maybe something like, I don't know, $15 every week or every 2 weeks or something like that. And as you guys can see, my return is pretty close to 150% gain of close to $1,000 now. And it's just like a speculative pie, as I said. I will be funding this one more, especially because I just created a new slice, which is disruptive growth, which I'll talk about last, actually. But yeah, other than that, this is my portfolio. And yeah, let's go ahead and talk about cryptocurrency. All right, so this is cryptocurrency in the long run ever since 2017. As you guys can see, we've sort of been just consolidating in this range between the 200-week moving average and this upper trend line. So this area pretty much acts as support. I was sort of waiting until it got here before I started buying. One like fun fact is that my average cost on Bitcoin used to be like 3,800. Because I got pretty close to timing the exact bottom. The reason why it's not that is because I actually sold it a little after, and then I was like, why did I sell this? So then I sold it at around 7,600, and then I bought again at like 7,700 or something. I was like, why did I sell this? So the average cost doesn't look as good as it could be, but yeah, that's just a fun fact. Anyway, so given that we've mostly been hovering around the top of this trend line, and basically every time we get to this to the 200-week moving average, it seems like there's a lot of support and a lot of demand for Bitcoin. And yeah, like I said, so given that we're mostly hovering around this top, I think that shows there's more demand for buyers. And obviously, like with consolidation zones, especially one that lasts so long, when you do break out of a range, it tends to be pretty explosive. And so my bias is to the upside, especially now. And so, Bitcoin at 9K is not as attractive as it is, at 4K, 5K, 6K. But yeah, I'm basically just like, I put my seatbelts on, like I'm ready for this ride to commence. And like I said, I actually purchased Bitcoin through Robinhood. One thing I have to make clear here is you don't actually get like a signature when you purchase it through Robinhood, in the sense that you don't actually own Bitcoin unless you go through another broker. I think Coinbase might be the most popular broker for just cryptocurrency. So if you guys actually want to own Bitcoin, you will have to go to different brokerage. So in a sense, it's almost like I'm just trading the futures of Bitcoin. And obviously I can sell and buy again for a profit. But yeah, I just want to put that out there for anyone that's buying Bitcoin. If you really, really believe in Bitcoin actually being used as a currency in the future, which obviously it may very well be, especially with all the different problems of fiat currency. So yeah, if you really do want to own Bitcoin and you own it on Robinhood, then just huge disclaimer, you're not actually owning it on Robinhood. So yeah, I mean, feel free to check out a different brokerage if you're learning about this for the first time. So as I mentioned, my average cost is around 7.4K. I have about $2,000 into Bitcoin, and I would probably only add if it dropped to about sub 5K. For now, I'm just holding what I have. I probably wouldn't put any more money into Bitcoin, to be honest. So 2K is what I'm comfortable with. And the last speculative investment is actually something I consider disruptive growth. So I literally just funded disruptive growth maybe yesterday, so it's brand new. So I don't even have that much history into it. Let's just go ahead and take a look at it. So I just have about $142. I'm planning on building this up to be at least 1,000, maybe even 5,000 within sometime in 2021. But essentially, I'm looking at stocks that I think are poised for explosive growth in the future. Now, unfortunately, I did miss a lot of the run-ups because I just started this portfolio. But like, for example, because Tesla and Square have run up so much recently, I still think they have more potential to run up. And because I don't have that much into this pie right now, I'm more than happy to actually average down if I, accidentally bought the top or something like that. Well, I have like 10 bucks in Tesla, like who cares? I'm very, very happy to be averaging down if it does drop. So yeah, I think I'm gonna go ahead and post this slice into the description box if you guys want to take a look at this. So I basically have Zillow, LendingTree, which are pretty popular companies in real life. I have Slack, Tesla, Illumina. The biotech stocks probably aren't that popular like Illumina and CRISPR. Actually, both of these are probably pretty popular, but there are some stocks that are not that popular towards the bottom. Like I said, I don't want to go over each individual investment. I'm just going over as a whole what speculative investments are. And the reason why I like speculative investing so much is because it gives one the ability to scratch the itch that they have in terms of gambling and wanting to invest in something that, has a little bit more risk. Like, I'm totally happy with spending money here. I'm not the type of person to go to Vegas personally, but I would gladly just throw as much money as I can into speculative companies, because that's just my way of scratching that itch. Like, who doesn't love the rush of potentially, doubling or tripling your money, like I have with my gold miners actually. I was buying gold basically when people stopped talking about it, and now I'm buying crypto when people aren't really talking about it too much. And obviously, with the disruptive growth pie, these stocks are very much in the news, but not all of them are. And yeah, I think there's still some room to run for a lot of them. So that's basically point number one. As I mentioned, scratching the itch is important because, especially if you can contain that. So I'm only putting like maybe, I don't know, less than 1% of my net worth into these types of investments. So because I can contain that, I don't jeopardize the rest of my investments. Like, the rest of my investments are volatile enough, and they can swing 5% anytime. So I don't want those worlds to mix. And so in the investment world, there's a lot of different types of investments. There's trend following, and I really shouldn't even say investments. I should say like investing or trading strategies. So there's things like, trend following, there's like mean reversion. And just like put in English, there's basically some investments where you bet on a lot of things at once and you put very little money into them. And the idea is that one or two of those things are going to hatch, just like, Daenerys Targaryen's dragons, for example. Well, they all hatched actually, but you know what I mean. So, if just one or two or three of these small investments blow up, it's enough to compensate for maybe subpar growth in a lot of the other ones. And so let's just go ahead and go over some formulas. I'll take you guys back to math school. So a very simple version of the expected value formula is basically the probability of something happen multiplied by the number of trials of that experiment. So for example, if you have a very generous friend that says they're going to give you $1 for every head you get based on how many times they flip the coin, then after one flip, you would actually expect to get 50 cents. And that's because the probability of you getting ahead is 0.5 times the number of times you're going to flip a coin, and that's once. So the expected value here is 0.5. And so basically, if you were to double that, if you were to flip the coin twice, then your expected value is. And bringing it back to the finance world, so if we're talking about expected value or expected return within speculative and non-speculative investments, if we're talking about something like Procter & Gamble and Coca-Cola, the probability of those being a successful investment is actually quite high, but the potential reward, if that's the case, is actually quite low. And so your expected return is actually pretty understandable. It's pretty safe, pretty reliable, which is totally fine. But in terms of just investment thinking, investment philosophy, what you want to do is maximize the potential reward of something while also making the probability of that being a success to be as high as possible. And I think in terms of like options trading and in terms of like really leverage trading, there are going to be moments where the stars sort of align and you can maximize the probability of success and maximize the potential reward of something happening. The probability of success, in my opinion, for any particular investment is much higher after the prices are way, way, way lower, because there's just less risk of failure, basically. It's almost as if you're buying something like it's priced to go out of business. Or even just like simple math, if you're buying Bitcoin at, let's say, $1,000 versus buying it at $20,000, there's definitely a higher floor and a higher ceiling within both of those scenarios. So it sounds like a whole bunch of fancy math, but it's basically how we think about investments in the first place. And with speculative investments, I think there's ways to maximize the potential probability of success. And so, yeah, that's basically what I'm trying to do with my investments. But because the probability of success is so low, I can't put that much money into these. And so my expected value probably is maybe even just as good as investing in Procter & Gamble. So that's something to sort of think about is if you can't beat the expected value of Procter & Gamble or Coca-Cola, then maybe don't venture out into speculative returns. But for me, I'm just basically experimenting with that probability of success and yeah, trying to figure out what the best type of investment is. For now, it's probably just an itch to scratch. But yeah, we'll see how this one goes. I'll probably do updates on it. Let me know if you guys like speculative investments. And with that, I'm gonna sign off. So thank you guys for watching, and I'll see you guys in the next video.